very pleased to have Mr. Eduardo Gills with us this afternoon. He is the co-founder of TradingTotal, which we have just a wonderful educational institution we've been working with for quite a while. He is he's chemical. He actually has a degree in chemical engineering, and he was a former university professor in physics. But he's actually been trading for about 30 years. It's about 30 years of experience in trading energy derivatives, petrochemicals, crude oil. So quite a lot of experience in the market, and his philosophies, he's actually done a wonderful job of transferring into a very usable system and methodology, and brings it together very, very coherently. So without further ado, Eduardo, are you there?
Yeah, I'm here.
Wonderful. I'll change the presenter link over to you.
Okay. Okay, guys. Good evening, everyone. Thank you for being here today. My name is Eduardo Gills. I am TradingTotal co-founder and CEO. I am very glad to be here to present this webinar in the name of our company, TradingTotal-USA, and as a MetaStock partner as well. Now, let me talk a bit about our company and what we do. Our firm, TradingTotal, is located in Sarasota, Florida, and our company is devoted to technological trading and education. We develop algorithmic trading systems and algorithmic tools for independent traders. And at the same time, we offer a unique technology-based methodology for educating and training those traders in the use of our technological systems and tools and MetaStock, specifically designed for MetaStock. Let me now go into the webinar. Let me show you our today's agenda. Our today's webinar is titled Trading the 450 Moving Average. And let me say that we have a lot of topics to be addressed today. So let me discuss the agenda with you. We are going to present the 450 moving average strategy because this is a macro trading strategy, okay? We will discuss first what is the 450 moving average idea and why we are going to trade this extra long period moving average. We will analyze what we are looking for, because this is not about just trading any 450 moving average. We will look for specific 450 moving average patterns, for specific 450 moving average visual patterns. And at the same time, we will be looking for a few more technical variables to maximize the corresponding technical quality. By the way, you can trade any type of moving average, simple or exponential, but basically we will be focused on exponential moving average. This is the moving average we like the most, basically because it's very good reactivity. At the end of the webinar, we will be presenting a specific exploration strategy for MetaStock, which will be our TradingTotal EMA 450 for MetaStock, which will screen and will find for you very good quality 450 moving average setup using an extraordinary MetaStock capability, the Explorer functionality. We will also define our possible entry points, the aggressive entry point and the conservative retest entry point. Finally, we will refine the entry because the 450 moving average, which will be presented in a few moments, is a macro strategy, but you need to execute the entry in every case. So you will need a precise and very efficient entry strategy. Let me move now to the next slide, which is the number 4. We have to answer this question, why the 450 moving average is a good long-term reference as a support or resistance. Well, moving averages are traditional support and resistance reference in technical trading. Everybody knows that. Let me set a few concepts. We classify those moving average in short, medium, or long term according to how many periods we are taking in account. It's more or less universally accepted that short terms are 5, 10 periods, or even 20 periods, 14 periods moving average. Medium term, 50, 50, or even 100 periods, right? We will be talking about a long-term moving average when we are talking about 200 periods and up. So let me take a look at a few examples. Let me move to the next slide. This one. So let me say that long-term moving averages we're always taking in account as a technical support and resistance reference. Okay, many traders like to trade 20 moving average crossovers. They buy along after crossing up and selling after crossing down. The scalpers love to use 10 moving average, 10 period moving average, or even the 8 moving average, or even the 5 moving average during a high accelerated price movement. And among long-term moving average, the 200 moving average is maybe the most used long-term moving average. Long-term traders in any time frame used to trade the 200 moving average, trying to take advantage of a more or less important price movement. But at the same time, and for this reason, crossing the 200 moving average is maybe a very obvious play, a very expected play and predictable play. We are going to see several examples during this presentation, but we have to recognize and we have to acknowledge and be aware that for this reason, there are usually many attempts to cross over the 200 moving average, and many of them are unsuccessful. They are fakes. This is what I am trying to say. As we move to longer period moving average, okay, we find less crossovers, but much more successful crossovers in general. For example, if you set your indicator with 300 periods or 400 periods or 500 periods moving average, well, you can confirm this concept. You can do this exercise with MetaStock. It's very easy to change the period in the moving average indicator with MetaStock. What we did find is that the 450 period moving average crossover seems to be long enough or conservative enough in relation to the traditional 200 period moving average, and at the same time, anticipatory enough in relation to the 500 period moving average, for example, in order to get a reasonable number of good quality technical events to be traded with a reduced number of fakes and at the same time with a lot of potential profit. That's the core concept here. We can say that's what it's all about. Let's take a look at the following example, the number 5 slide. This is what you're watching right now. And you can see that here we have in violet color, the 450 moving average. In red color is the 200 period moving average. And you can see prices crossing up and down long-term moving average. Of course, you can plot the 500 or even the 400, and it would be very similar at the same time. The concept is not the number of periods you are taking into account. The concept is that we need a long-term moving average. Okay, here we can see 3 events that we are going to trade during our activities. Let me say, this is a very interesting example. For example, this cross down, okay? This is a cross down, what we call a cross down. Prices are crossing below the 450 moving average. This is a cross up, and these are retest. And basically, this is all the setups we are going to trade. Crossovers or cross down and retest, okay? In this case, the 450 moving average during this very potent up move is acting as a support. In this case, in this incipient bounce, it tried to act as a resistance. Let me comment just in this example that this is a very risky cross down, because this guy, this 450 moving average, the violet one, is going up sharply. And here we have maybe the number one key concept here. We never fight against a long-term moving average, okay? This is not recommendable because there are a lot of traders that still are keeping long positions. We don't want that, okay? Let me move to the next example where we are introducing at the same time our, just one second, where we are introducing our TSS alert system. We are plotting the 450 moving average here, the 200 here, and these are our alerts, our signals, composing the TSS alert system, composed by 3 elements. We are going to discuss later in more details about the TSS, but I have to explain something right now. The 3 elements are the ribbon at the lower part of the chart, bullish or bearish, taking into account basically the trend, but with something of volatility and momentum, okay? The number 2 element are the highlighted bars, which are telling us that the momentum is very present, okay? In every bar painted with this very characteristic fluo green color. The other element are the alerts, buy alert, and the sell alerts. Let me explain very briefly that what we are looking for always, all the time, is that all the elements present at the same time. I mean, we are looking for a long, we are looking for a green bullish ribbon here, a green highlighted bar, and we are going to execute the entry according to the buy alert. We will be talking a little more about the precise execution at the end of the webinar, okay? But you have to understand that these alerts are very powerful, very solid systems of buy, telling you when to buy and when to sell. When we combine with the macro strategy of the 450 moving average, both macro strategy, the 450 moving average, and the micro strategy of using the TSS alert system is something very powerful and very solid, okay? Let me tell you something here about this example, which is the number 6. Here we have an incipient cross down right now, not so weak, but it's limited down move, okay? Before this reversal. This is a reversal, and prices try to build demand here successfully, by the way. Well, this alert systems, we are going to introduce you with the signals and to train you with the signals as we are analyzing and commenting the different examples. In this case, for example, we have the buy alert, but we don't have the highlighted bars. We have the ribbon, we have the alert, but we don't have the highlighted bars as we have here, for example, okay? And basically, this is another concept, very important, referring to the moving average, and is how those moving averages are ordered or are deployed. This is a mess. We have a lot of cross. It is a spaghetti plate, so we don't like spaghetti in trading. So basically the concept is what I normally do is to wait until we have the classic order. The 20 above the 40 or 50 above the 100, and the 100 above the 200 moving average, so in bullish position. This is the minimum acceptable setup in terms of moving average arrangement. After we've got that requirement satisfied, which is basically right here, we can start to think on trading along. Just after we have the 20, which is the blue one, above the 50, and the 50 above the 100, which is the green, and the green above the red. Before this point, no trading, okay? Remember that this is a very conservative strategy. So, of course, there are people trading from here and from here. Yes, okay, but we are trying to present a strategy pretty conservative. This is the idea, okay? We are going to discuss later in this presentation a certain type of key crossover, but I am going to show you right now. One of the key crossover after this moment is when the 20 moving average is crossing over the 450. This will be, all these things we are talking right now will be summarized in our slide number 28. Remember that number, it's very important, because in that slide, we are going to put all together, okay? So don't worry about this, it will be very clear, very clarified for you. I am trying to present right now that this is the crossover. This is the play, this is a macro setup we are going to trade. And we will show you that the moment when we are considering a possible long entry is this moment, where this yellow vertical line is. From the moment when the green one, which is the 100 moving average, is crossing over the 450. Okay, more or less at the same time, in most of the cases, you will have the 200 moving average turning around and going up. This is another thing we need to see, okay? The situation between the 450 moving average and 200, and let me say something more, that the more conservative entry will probably come after the 100 cross over the 100 crossing over the 450. Well, I already said that, okay? But it's very important to reinforce, because this is a moment from which we trade. I don't trade before this crossover. Never, never. Why? Because it's very risky. You can say that, well, but you have the signals. Well, but the TSS signal system and the different system we handle all the time, they are designed to be applied by all the risk profiles. Today we are teaching you, we are showing you one of the most conservative and the most successful strategies using the 450 moving average as a reference. Okay, this is very important. Another important concept, we already said, never fight against the 200 moving average or the 450. I mean, trading into the opposite direction, right? For example, we have buy signals, okay? But look, this for 200 moving average is going down. This is too risky. Despite this signal works perfectly. Yes, because the system is very solid, but this is for very aggressive traders. Maybe it's not for you, but if you are an aggressive trader, that's okay. You can define your own strategy and we can collaborate with you defining your trading plan. But today I am talking about the trading of the 450 moving average, which is basically a very conservative strategy. Another comment about this example is more than recommendable to have both the 200 and the 450, the red and the violet, a little closer. I mean, as close as you can. Think on this concept. We need to have and to see the 200 moving average making pressure into the 450, okay? And you only can get this situation when both are more or less close to each other, okay? This situation we can say that is more or less here. In this example, the buy signal, okay, the first workable and tradable buy signal for us is this one. And let me say that this is not 100% perfect, okay? Because if you can see, we have the ribbon, we have the alert, but we don't have the highlighted bar. But we do have the highlighted bar in the next coming bar. So for us, this is acceptable as we break this very close resistance. This is the first tradable signal. The first signal we have after this 100, 450 crossover, okay? You can see that everything is perfect in this area. We have all the key moving average going up, uptrending. This 200, this is turning around, okay? But it's ready to go up. The 100 going up, the 50 or 40 going up, and the 20. We have the ribbon, we have the alert, and next bar, we have the highlighted bar. So boom, get the position, buy the long, okay? This is more or less a concept, right? Let me move to the next slide, which is number 7. So I am trying to wrap up all the concepts we were talking about. Why we selected the 450 period moving average? Well, why not? Yes, this is a good answer, but there is more reasons. From our experience and statistically, we find out that big price movements start from long-term moving average crossover. It doesn't matter if it's 450 or 500 or 400. But at the same time, we found out that 450 period is long enough. It's much larger period than the 200. It's a little more anticipatory than the 500, and it works. This is the reason why we are using the 450. It's a little more anticipatory than the 500. 450 moving average works, a strategy works perfect in every time frame. Daily, 5 minutes, 1 minute. If you ask me where we can trade with more confidence or where the system, the combo of the 450 and our alerts works better, well, I like the 1 minute moving average, the one minute time frame, and the daily time frame. Both similar performance, very good. Let me show you several examples. This is slide number 10. No, number 8. Well, number 8. In this example, I would like to show you the crude oil crash, the crash down, a catastrophic movement, which was clearly foresaw by our TSS alert system after this sequence, very strong sequence of sell signals. 1, 2, 3, 4 consecutive in a row sell signals. This was in August of 2014, as you remember, okay? This is a perfect textbook example. A couple of comments when we are dealing with this kind of tight sideways basis, in this case it's a top base. Well, don't try to anticipate the 450 crossover. Only take a position after 200 moving average did cross over or below, in this case, below the 450 moving average. Because, well, this is a mess. We have all the moving average cross, up and down. There is no defined signals at the same time. You can see here we have the highlighted, we don't have buy alerts. Here we have sell alert, but we don't have highlighted. Here we have sell alerts and highlighted and ribbon, but 200 moving average going up, okay? The only one that we can discuss is this one, okay? But moving average are still a mess, okay? And the other one that maybe could be traded, maybe, is this one or this one. But you have a lot of resistance into the left. So we need to break the box in order to start the trading. In that case, these consecutive 4 signals, sell signals, are the alert you need to be ready to trade. And when the base is broken, this one and this one, which is the same support, well, the first signal should be taken. Know that this is the moment when the 200 moving average is crossing the 450. So this is the kick we need to go down sharply. This is exactly what happened. This is, look, this is 90 points of crude oil. That was the price until 40, 45. This is $45,000 just on one contract, okay? This is pretty serious, okay? Nobody foresaw this crash down. Even very specialized forecasting companies involving petrochemicals and crude oil. It was a huge success for us, for our system. So let me summarize a few concepts we are rounding. We are wrapping up. Moving average trending. We have to pay attention if the key moving average are uptrending or downtrending. At the same time, we need to pay attention on relative position, the deployment. If the 20 is above the 40 is above the 100, or we have the 100 below the 40, this is key. It is a classic trading concept. 20 above the 40, 40 above the 100, 100 above the 200. This is a minimum acceptable arrangement, okay? We will summarize everything in our slide number 22, remember. And the other thing we have to pay attention is the crossover. We are going to analyze a lot of crossovers right now. This is our number, let me see. This is our number 10 slide, okay? Number 10 slide. Let me talk a little about this CBS example. CBS is a stock, okay? Actually, we already talked about this example. Let me drink something. But I will remark a couple of concepts. In first place, here we have one of the 2 setups we are going to trade, and we have to be looking for all the time. The crossover, okay? After a certain down move right here, okay, CBS did a reversal. This reversal is a pretty one, pretty nice, and prices went into this area. This is another important concept. We are actually looking for when prices are going into this area. We consider all this area, not only the 450, the area compressed between the 200 and then 450, the red one and the violet one here, okay? After prices went into this area, there are 2 possibilities, 2 possible options. To continue up, confirming the crossover, that was exactly what happened. This is the crossover and prices continue up to develop a very strong up move, okay? But the other option that didn't happen, but could happen eventually, is to show a bearish 200, 450 retest. So prices eventually can go into the 450, 200 moving average area, failing the cross up and continuing down. So we have a down continuation move. This movement is what we call the retest. Prices are retesting this area as a resistance. If this retest finally is confirmed as a bearish retest, prices will continue down, and we have a retest set up. If not, we have the crossover. But everything is about crossing or failing to cross the 450 moving average. So we have this breakdown after this small, not very significant breakout. After this fake prices went down, they tried to build demand going into the 450 moving average to retest that area. In this case, this retest was failed, but what was successful was a crossover, right? Here we are marking what we were talking before, this crossover, which is a key crossover, the 100 crossing over the 450 moving average, okay? The green crossing over the violet. After this crossover, we are authorized to take longs with this 450 approach, okay? Which is the first signal we have? This one. This is the first signal. What happened here? We have the confirmation after this 200 period moving average cross over the 450. But if we take this one, of course it's more conservative. Of course it's a safer play, but we are eventually losing part of the movement. So what we do? Well, normally we try to find an entry after this crossover, after the first signal. Rebound, buy alert, highlighting what happened right in this bar. We were discussing this example before, but I wanted to clarify a little more, adding more elements, more knowledge and experience about this kind of movements. Okay, let me now move a little forward. Basically, when it's possible, as I told you, we try to take this signal. Why not this signal? This is a good question, a very valid question, okay? Because, well, very simple. Moving average is a mess, or crossing up, down, they are not defined. And we have those guys, these guys going down sharply, the 200 period moving average and 450. We can accept this 450 turning around flat or barely going up, but we can accept the 200 moving average going down. We need to turn around. And in general, when that happens, the 100 will be above or crossing up or almost crossing up above the 450 moving average. Very simple. You just need to follow the signals and the alerts and to verify that all the conditions are being complied, are being satisfied. Let me move to the next example. This is the number 11. Is another example showing both crossover, macro plays, up and down. This is just to identify the big scenarios, okay? We will be looking for all the time. Note the problems when we trade against the uptrending 450 moving average. We were talking about this example, but I want to reinforce this. This guy is going up sharply. So can we trade this down? Yes, we can, but it's risky because we have a lot of bulls here above this moving average. So we don't like to do that. We prefer to trade down after volatility went down a little. And this normally happened when this guy became downtrending and this guy is turning around, okay? Look, this area compressed between the 200 and 450. This is a very wide here. This is not the moment for any kind of trading, but right here we are being prepared to take a long, okay? and we don't have the signals right here, which are they are very important, by the way, you understand that, but this is the macro play or setup. The 450 moving average crossover. This is a long play. Let me go to the next example. And here we have the second type of play, the retest. Okay? We have this cross down, which, by the way, is not very tradable. We have sell signal, but not highlighted bars. We have the ribbon, okay? Here we have momentum, but we don't have sell signal. Why? Because this guy is going up again. Prices try to build demand, okay, and they try to go up. It was not successful. They could reach the 450 to cross over, and this is basically because prices went into a downtrending moving average, 200 moving average. This is going down very, very sharply. Okay, so this is a retest. Prices try to go up to cross over, they fake, they fail. So we have the retest. This is the movement to be traded. Right here, we have everything: the ribbon, the sell signals, the highlighted bars. Boom! Below that base, this is a very interesting move to be traded and very safe at the same time. Sometimes happen that you can reach the down move for whatever the reason, okay? Because you don't like, because you don't have all the elements, or you are late, or something, you lost the trade. So we need to wait until the next retest. When you have this kind of bearish retest, you can trade the second round, the second leg. It's very safe play, by the way, okay? Because the 200 already crossed down the 450. Very interesting example. So let me reinforce the concepts. We like to trade a couple of very well-defined planes or macro setups, either long or short. The 450 crossover, over or down, you understand that, and the 450 retest, which is basically a continuation play. This is the next slide is our slide number 14. Another example. Because with this slide, I am trying to show you and to explain that these crossovers are processes, and very complex processes most of the time, okay? In this case, we are showing you a previous down move. We know that was more or less potent because this slope, this 450 is going down with a very high slope, okay? And this 200 moving average. The movements halt and stop, and prices try to build demand more or less successfully right here, going up and retesting this area, the 200 moving average and the 450. In this case, this retest was more or less successful, okay? It took a lot of time. You can see that this is a daily time frame, it's a lot of time, from April 2016 to October. So after this process, we have the right moving average arrangement, the 20 above the 40, we can say the 40, but it's more or less here, the 100 and the 200. And the 200 is below the 400, but it's making pressure into the 450 moving average. They are very close to each other. At the same time, moving averages are okay. The 200 is below, that's fine. It's okay for us as they are more or less close to each other. And we have the first set of highlighted bars, alert, and ribbon. Boom, this is a buy and a more or less interesting up move. Let me move forward in order to show this retest as another example. This is the slide number 15. Okay, after a more or less limited up move, momentum went down, prices went down into support. The support is the 450 moving average. Look, always our preferred long-term moving average, okay? And after the retest process, because we are retesting the 450 moving average area, prices went up again, trying to break this resistance. So we have highlighted bars, buy alert, ribbon. We break this messy area, so we can take this buy alert as a more or less aggressive entry, or this one as the more conservative entry. Very nice. And after this retest, normally is when we have the most potent up move. Okay, the strongest up move, most of the time. Okay, so if you lose this first movement, this is a crossover at the same time. Don't worry, you will have another chance after the retest. If we don't have the retest, you trade the cross down. So you always have the option trading the retest or the cross down. Just a small detail here that is very important at the same time, because it's well, it's a safety condition, I think very necessary. We used to trade that way. And it's when we are retesting or trading the retest, we like to have the 200 moving average above the 450. Why? Because we have some kind of failure here, okay? In some way was a limited fake, but it was. This up move was a little limited. So we need more confirmation. The confirmation is the 200 moving average crossing up and going up. You understand? Very nice example. But let me tell you, and this is our slide number 16, that once we did identify the 450 setup as our macro strategy, we still need to execute the entry. So we are only defining the moment when trade is okay, it's safe, it's a high odds activity. But we need to select the right moment to get into the position, to precisely execute the entry with a good quality micro strategy. Well, we will complete both tasks using our TradingTotal TSS, which is a very precise and very solid buy and sell visual alerts trading system. We were talking a little about the systems. Let me explain right now how many systems we have. Well, basically we have three types or MTSS and MTSS2, the TSS and the HTSS. And now we are going to show you the difference between them. And I'm going to tell you now which is my preferred for this 450 strategy. The first one, which was developed in something like 6 years ago, something like that, is an MTSS, which is called original because it was the first. Let me tell you that it was a very aggressive and very anticipatory at the same time system. So we decided to develop something a little more popular, okay, in terms of risk. We developed the MTSS2 system, which is a very solid, but at the same time, very conservative system. Okay, this is the system I like the most. And this is a system I recommend to use for the execution using this 450 trading strategy. We have another a little more conservative, which is the TSS, and the other one is much more conservative, so it's less anticipatory. That this system we use only when we have some kind of sideways situation where we don't want to take something from the beginning of, which is the beginning of something because there are fakes or something like that. Previously, there were fakes. So we use the HTSS because it's more conservative. I'm going to show you how the signals are showing up with a specific example with this CBS stock. You can see that, well, this system, the original, is providing a lot of signals, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 15, 16 alerts, a lot. Some of them are very successful. We use this MTSS original system just to receive the first alert. I mean, to receive the alert to be ready for something that will be coming with our more conservative systems. The MTS2 system is my preferred system, and is providing a few less alerts, 3, 4, 5, 6, 7, 8, 10 alerts of something. Okay, you can see the alerts. This is very nice, very interesting. Ribbon, highlighted bars, sell alerts. Okay, this is not useful. It's useless because with the 450 trading approach, okay, because we have the 200 going down sharply, so this is nothing, okay? This is nothing. We have highlighted bar here, but we don't have the alert. Here we have the alert, but we don't have highlighted bar. But these alerts are all of them useful. From here, for example, when this guy began to go down, okay, after this crossover, we need this crossover. And this is exactly when we are breaking this base, this support. You understand that the signals are teaching you where to take a position, where is a recommendable environment, okay? This is a risky entry because we have this 450 going down. It worked perfect, but it's not for the 450 strategy, okay? We have the TSS here, which is another very conservative strategy with a few signals. In this case, it's not a few, it's similar. Sometimes it's providing more or less a similar number of alerts, and sometimes even a little larger, a little more number of alerts, more alerts. And in this case, let me show you the HTSS system, which is much more conservative. Only a few alerts. 1, 2, 3, 4, 5, 7, 8, something like that. I am using this example in order to put all the system all together to compare in this particular movement, this particular array. We have the original providing 1, 2, 3, 4 alerts. The more conservative MTSS2 providing 1, 2, and 3. The TSS providing only a couple of alerts, and this one providing only 1. This is a difference, basically. So we like this one. It's conservative enough and at the same time anticipatory enough, right? How to execute the entry. This is very important. Very, very, very important topic. The concept is to take the next bar after the signal, the alert show up. Okay, in this case, for example, we have this buy alert. Well, important comment. The system is a closed bar system, or is a closed bar rule, which is applied in this system. That means that we only see the alert after this bar is closed. So if you have a daily time frame, you will see the alert the next day. In this case, it's not a daily time frame. This is a 1 minute time frame. You will see the alert during this bar. And we execute breaking the next resistance, which is this one. The first resistance we see taking a look into the left direction. Okay, let me show when we don't have resistance to the left, or well, or is far away. Okay, the concept is to break this buy alert high. So after this alert show up, will we show up after this bar close? During this bar, we take the position after this bar high. buy along, no problem. You have some ugly resistance here, you have to break that resistance. This is the concept, very, very easy. So let me put all together. The 450 moving average macro strategy and the TSS entry micro strategy. This is what we need. This is all the requirements to be satisfied. Look for, all these conditions are referred for a long position, I mean for a buy, okay? Look for a 450 moving average, good quality setup. 200 moving average uptrending. We already talked a lot about this. The 450 moving average could be flat, it's acceptable, or uptrending, much better, okay? But not going down. This is very important. We need the right arrangement. The 20 above the 40 or 50, the 40 or 50 above the 100, and the 100 above the 200. And remember, all of them must be uptrending, okay? Uptrending. And we also need the condition we were talking about before. We were talking about this condition, 100 moving average above the 450. You have to wait that crossover. This is a key crossover because before this crossover, you can't trade using the 450 strategy, okay? And the 200 and 450 as close as possible. And remember, when we are trading a retest, we want the 200 moving average above the 450. After all these macro strategy conditions are satisfied, we apply and we refine the entry, applying our MTSS2 or eventually the TSS if you like, looking for the following conditions simultaneously. We need the following three simultaneous conditions. The green bullish ribbon at the lower part of the chart, you remember that? The highlighted bars with green and with fluo green color, and we need the buy alert very close to our entry. We can wait 1, 2, or 3 bars, but not more than that, okay? If you lost that, well, wait until the next buy alert, the next buy signal. Execute the entry, buying over the buy signal bar high. And remember that is a closed bar rule. You need to wait until the present bar is closed. You will not see the alert while the current bar is alive, okay? The other topic to be addressed today is how to find the good candidates. So, because we have a lot of conditions to be satisfied, well, we developed a specific strategy, an exploration to be carried out through the Explorer capability at MetaStock, okay, which is a fantastic capability. The strategy is our TradingTotal EMA 450 bull crossover. You have to select your universe. In this example, we selected both universe, New York and NASDAQ. You will see now, and you have to determine the time frame. In this case, was a daily time frame. You can do that after every day close. Okay. This is the window. We have more than 7,000 stocks, which were screened in only 7 minutes and 38 seconds, or something like that. Something like less than 8 minutes. Okay. This is what we found, 9 candidates, and let me show you the charts, more or less, to verify. This was developed, I did this screening something like a couple of weeks ago, okay? All the prices are more or less into what we are looking for. And the idea is to use this screening, this is exploration, in order to build your watch list. Maybe you discard something and you keep 2, 3, 4, and you are building your watch list or watching list, okay? This is one of them in order to show what is going on. Is, well, a little aggressive, I'm not showing this because it's the best. It's just to show you how the signals and the alerts work. Okay, that is very nice, actually. We are almost finishing, and let me inform you that we are presenting you and offering you this special promotion for today's attendees. We are offering our system, the 4 systems, the MTSS original, the MTSS2, the TSS, and the HTSS for the price of 1, paying only 1 license for life, okay? The MTSS, the MTS2, the TSS, and the HTSS. And you will also receive 2 trading exploration strategies, the 450 EMA bull crossover, which is the right exploration for this 450 macro strategy, and another additional which is very good for 450 crossover, the potent green and red bar, helping you to find white bars, okay, red or green bars. And we are offering at the same time 2 training sessions, 30 minutes each. And well, that's it. Thank you for your attention. We covered a lot of topics. We ran a lot, but obviously we are very, very glad to receive your inquiries and your questions and whatever your interest. This is our email, and this is our website, which I will recommend you because we have previous seminars explaining how to use our TSS alert systems. Okay?
All right, wonderful. Thank you, Eduardo. Go ahead and keep your screen up there just so they know how to contact you. And to order this, how would they do it? How would they contact you?
I will be for a while here, so if there is some questions or doubts about our webinar or any additional question, well, I will be glad to address, okay? I will be here for a while. Thank you so much.
Wonderful. Wonderful. Thank you, Eduardo. And this system, I do want to stress that, I don't know many traders that do not use some form of either a 200 period moving average or longer term moving average. So what Eduardo has done here is he's put together, this set of systems that work very, very well for following trends. And with this system, also having the ability to get these training sessions with Eduardo, this is something that really is a unique opportunity. Instead of just learning methodology and watching a webinar and then kind of being hung out there and not having any additional support, Eduardo is always there to assist you and things of that nature. So definitely contact Eduardo. You can do metastock.tradingtotal-usa.com or admin@tradingtotal-usa.com. To take them up on this offer and do it fairly quickly so that we can get these training sessions scheduled up and get those on the calendar and get you taken care of. We will be here for a couple of moments answering any questions. Feel free to throw them in the chat box there. I'm more than happy to answer. If there's any MetaStock ones, I'll definitely hang around for that. Most of your questions are probably going to be geared towards Eduardo. But you can always contact us at metastock.com. If you don't have MetaStock currently and you want to take a trial of this, let's say that you're purchasing the systems from Eduardo, but you don't have MetaStock yet, that's fine. I'd be more than happy to help you get a trial of MetaStock set up. You can do this at metastock.com/TradingTotal341. And that's a 3-month trial for the price of 1. And I can actually put that in the chat box here so that you can sign up. So other than that, myself and Eduardo will wait around here for a couple minutes and answer any questions that you might have. And, I appreciate you guys taking time with us today. And as always, happy trading.
Thank you, Hunter, and thank you, everybody. Okay, bye-bye.